The political atmosphere in America is toxic for Chinese investors. Senator Marco Rubio urged Trump to pursue even tougher measures on Chinese companies listed in the U.S.
Yes, to a certain extent. And that is the reason why we're seeing increasing U.S.-listed Chinese firms coming back to Hong Kong. I would say that it's actually creating opportunities for investors here, and also, for Hong Kong as an international financial center. The market is well participated by global investors. So U.S. investors are also investing in the Hong Kong market as well. And also, because the Chinese listed companies now having a growing investor base based in Asia. So, considering the time difference, for example, if you want to do an earnings call after the results, you don't have to do it in the middle of the night anymore. You can do it in Asian hours. So it's actually, investor friendly for the market here. So I would say that, to me, once again, it is puzzling why the U.S. market wants to drive out the Chinese listed firms. After all, after so many years, many of the Chinese firms has given the U.S. investors tremendous investment gains.
But are you saying that it is not a big deal that the Chinese businesses are withdrawing from the U.S. capital market because they can have Hong Kong as an alternative?
It is not a big deal for investors who are interested in participating in the Chinese growth story. I think it's a big deal for the U.S. capital market, because if you look into the future in the next 7 to 10 years, the expected return you're going to get from the U.S. market, given the current very high valuation, is probably about 3 to 5%, maybe much less than that if you're lucky. And yet, I think China and the rest of the Asia is growing very strongly. So I would say that especially for pension fund investors, they need long-term stable growth, to fund the retirement liabilities. So I would say that, if you miss out a growing market such as China, it is a really bad news for U.S. pension fund investors.